Today we're going to discuss three challenges for doing commercial financing on strip malls or plazas. Three challenges would be: one, cash flow. Second challenge might be the tenant mix, or maybe the terms of the leases that the tenants have. And the third thing would be vacancies. So the first challenge, cash flow. When a lender is lending on strip malls or plazas, they're looking, very important, and it's a snapshot of what is today. What is the cash flow today and what are the expenses? And they want to see a positive cash flow. So you pay all the expenses, including management, maintenance, and then usually they want to see about a 10 or a 15% profit, let's say, left over. So that can be hard sometimes. Maybe you have a building that you own that you plan on doing some refurbishing, maybe changing the tenant mix, and you are making it so that the rents are going to be higher. Well, they won't really, they'll lend only on what it is today. So it's a snapshot in time. Whatever it is today, that's what it is. So cash flow can be a challenge sometimes. And basically a lender will say, okay, we'll still give the mortgage, but we're going to reduce the amount because they need that cash flow to be there. So that's the first challenge. Second challenge when we talk about tenants, so it's the mix of tenants. Who are your tenants? If it's a small plaza or a strip mall, who are your tenants? Are they all just local businesses? Or do you have, in a strip mall, when you talk about, it's not really an anchor tenant, but it's, let's say a bank, for instance. So do you have at least one tenant that is a bank that sort of draws people to the plaza? That's a good thing, or if you have two, that's even better. So a lender will look at that. If everybody is kind of just a neighborhood type of tenant, it's not as strong. And what goes along with the mix of the tenant also is, what is the mix of the leases in place? So when are they due? If we're doing a 5-year mortgage, are most of the tenants, have they signed 5-year leases? Are they in for 3 years? Do they only have 1 year to go on their lease? A lender will look at that. And if you have a lot of tenants that the leases are expiring soon, they don't feel comfortable doing a 5-year mortgage. So that's the second challenge. The third challenge would be vacancies. So that's a pretty big one. Now you may be buying, or you may have a strip mall or a plaza right now, and you're doing some things. So let's say if you own a plaza, strip mall, you might say, well, I have a vacancy, but you know what I'm going to do? I'm going to refurbish the mall, I'm going to do this, I'm going to do that, and I don't care that it's empty right now because I'm going to start getting higher rent. Well, a lender, again, they won't look at that. They give vacancies pretty much a zero value. So it's hard to cash flow. One vacancy you can get away with and still, get a considerable mortgage. But if you have too many, it becomes difficult, especially if we're trying to get, an A-type, a very good rate from an A-type lender. If you need any more information, give me a call at 416-464-4113 or send me an email. I look forward to speaking with you. Take care.